Hello everyone, what's the impact of interest rates on investment real estate, and why is it that when interest rates go up, it's got a negative impact on investment real estate? In my video today, I'll give you a specific example showing you exactly what the problem is when rates go up and why it's got such negative impact on investment real estate. Before I get started, if this is your first time on my channel, my name is Mikhail Kirchin. I'm a commercial real estate broker. I work in the Quebec and Ontario markets in Canada, and I'm also an investor in the space. Interest rates have really been quite something in the last little while. Obviously, in early 2022, when it started going up significantly with the US Federal Reserve increasing the rates, it had a similar impact all across the world. Every single central bank pretty much followed, meaning that we've seen interest rates go up quite a bit in the last year. The impact has been quite horrible on the commercial real estate space and also in any real estate space. Whoever is an investor in real estate, obviously you felt the pinch. I'll give you a specific example with a client I had a discussion today. Their dilemma was the following. They had a property that generates $185,000 of net income. And in their opinion, this property is worth $7 million. And this property is located in the Montreal market in Canada. And when I asked them why they thought it was worth $7 million, because the properties, they said the neighbor next door just sold for $5.5 million 2 years ago. So in their opinion, well, if they sold 2 years ago, our property today is worth $7 million because real estate only goes up. It's not true. If you look at the numbers, in 2021, interest rates would have been around 2.5%, meaning that a property that had $185,000 net income with, let's say if we amortize it, 35-year amortization rates of 2.5%, would have gone a loan from the bank of in the range of $3.3 million. So somebody who bought that property for $5.5 million, which would have been a cap rate of around 3.36%, would have bought a property for $5.5 million, would have got a loan of around $3.3 million, would have put down payment of $2.2 million. That means at 40% cash down, they would have bought the property. That exact same property today, when interest rates are 2% higher, going to the bank at a rate of 4.5%, again, amortization of 35 years, and now with the 185 net, which is going to be if they want to sell the property for $7 million, it would be a cap rate for around 2.64, which is horrible. And at a rate of 4.5%, they would be basically needing a buyer that's going to be getting a loan of around $2.5 million. So now the buyer is going to have to put around $4.5 million down payment, which is 64% of the sale price, which makes no sense. So here's the impact. The news media, any kind of news, whether it's financial news or it's regular news, they're not giving us really clear explanations of why when rates go up, it's got such a negative impact on the real estate. The bottom line is that when the rates go up, now all of a sudden, the borrower is able to borrow a lot less for the exact same net income, and hence they're not going to be able to pay the exact same sale price to the seller as what they would have paid a year or 2 years prior when interest rates were lower. So if you're a seller in the space, and if you want to be really keeping up your property's value, you must do whatever it takes to increase your property's net income, because as the property's net income goes higher, the borrower or the buyer of your property will be able to get a better loan, then they'll be able to give you a better sale price. If you're a buyer in the space, as a buyer, you want to basically make sure that you're buying properties where the seller is educated to understand what the pricing is, so that way they're not going to be asking numbers that don't make sense for you as a buyer. And the commercial brokers that are working in the space, you have to really pay attention to what's going on with the interest rates. As interest rates are going up, then the borrowers and the buyers are able to borrow less. They cannot pay for the same properties the exact same price as they were paying a year or 2 years ago when the rates were much lower. Hope this helps. If you have any questions, any comments, please down below.